Welcome to this explainer. Okay, today we are diving into a pretty wild question. Is one of the most controversial tokens in all of crypto actually the secret backbone of global finance?
To figure that out, we've got a packed agenda. We'll start by looking beyond the crypto hype. Then we'll explore TRON's stablecoin monopoly, break down the actual profit loss and price dynamics, and finally wrap up with a hard look at the 2026 outlook.
So let's jump right into part 1, Beyond the Crypto Hype, where we uncover TRON's true identity.
Let's be totally honest here. For years, TRON has kind of been the punchline to a lot of crypto jokes. But you know what's crazy? While other networks were busy chasing shiny new meme coins, TRON quietly, and I mean very quietly, became the infrastructure of global decentralized finance. It is a massive irony. The token everyone used to associate with flashy, over-the-top marketing is now doing all the heavy, boring lifting of global money movement, just doing the actual everyday work.
Let's rewind a bit to see how we got here. TRON was founded back in September 2017 by the highly controversial crypto entrepreneur Justin Sun. They raised $70 million in an ICO literally days before China completely banned digital tokens. Talk about wild timing, right? Initially, they just piggybacked on the Ethereum network, but by May 2018, TRON spun off into its own independent mainnet. In those early days, they pitched themselves as this decentralized entertainment platform. They even bought BitTorrent. But fast forward to today, and their true product market fit turned out to be something completely different. Absolute, undeniable dominance in stablecoin settlements.
Which brings us perfectly to part 2, the stablecoin monopoly.
Look at this. By 2025, TRON had quietly captured roughly half of the entire global tether market. Half! We are talking about over $78 billion of value moving on this single chain. Think about that for a second. While the rest of the crypto market was hyper-focused on chasing speculative hype, TRON was out there processing literal trillions of dollars in real-world volume. So why TRON? Well, imagine you're living in a developing nation. You're watching your local currency absolutely plummet in value, and you desperately need a safe haven just to afford basic groceries. Paying sky-high network fees on Ethereum is an absolute deal-breaker if you only have, say, $50 to your name. That is exactly where TRON stepped in. They offered incredibly cheap, lightning-fast access to digital US dollars right when people needed it most. It effectively became the unbanked financial rail for the world. Now here's how all this massive real-world volume actually benefits the network itself. It's brilliant in its simplicity. Every time a user initiates a Tether transfer, a tiny amount of TRX, which is TRON's native token, is burned to pay the transaction fee. Because those tokens are permanently destroyed, the overall circulating supply shrinks. And since TRON is processing millions of these transactions, the network is constantly burning more TRX than it creates. This hyper-deflationary engine creates a really strong structural price floor that is backed by genuine everyday usage.
All right, let's move on to part 3, profit, loss, and price. What does this all mean for investors?
Let's set a baseline. During that 2017 ICO we talked about, a single TRX token cost roughly $0.0019. So, yeah, just under 0.2 of a single penny.
For those early believers who bought at that price and actually held on, they are sitting on staggering, mind-blowing gains exceeding 18,000%. It's a pretty remarkable testament to how a network can mature from a highly speculative, almost experimental idea into a fundamentally strong, slow-grinding asset that consistently rewards its oldest holders.
But hey, what about the more recent buyers? Let's look at the peak in late 2024 and early 2025, where TRX hit roughly 44 cents. As of May 2026, it's trading right around that 35 to 36 cent range. So buyers at the absolute peak are looking at roughly 15 to 20% paper losses. Honestly, nobody likes seeing red in their portfolio, right? But a 20% drawdown from an all-time high in the incredibly volatile crypto space? That is remarkably mild, especially when you compare it to rival altcoins that routinely crash 70% or more the second the broader market corrects.
Which brings us to our final section, part 4, the 2026 outlook.
So what are we looking at right now? Well, the bull case for TRON is incredibly compelling. First off, you've got 2.6 million daily active users actually relying on the network every single day. That's massive. Add in that hyper-deflationary tokenomics engine mathematically supporting the price. And looking ahead, The ecosystem is aggressively pushing into artificial intelligence and real-world asset tokenization to try and attract huge new waves of institutional cash.
But of course, we have to look at the flip side, because the bear case carries some very heavy anchors. Back in 2023, the SEC sued founder Justin Sun, alleging market manipulation, specifically wash trading, which is essentially trading an asset with yourself to create fake volume. On top of the legal drama, the network relies on a system of just 27 node operators to validate all those transactions. Critics strongly argue this makes TRON far too centralized compared to its peers. And finally, its greatest strength is arguably its biggest vulnerability. If Tether ever faces a catastrophic regulatory crackdown, TRON's primary revenue stream would practically draw up overnight. So, it is a classic tug-of-war. As an investor, you're weighing this incredible, math-backed, real-world utility and future AI growth against the lingering SEC lawsuits, structural centralization, and a potentially fragile reliance on just a single stablecoin. Ultimately, looking at all the data in this explainer, the research points to TRX as a moderate-risk, fundamentally strong asset. It really is an excellent utility-backed anchor. Let's be clear, TRX is not a speculative lottery ticket designed to wildly multiply your portfolio overnight. Instead, it's a proven, revenue-generating machine offering stability and slow, deflation-driven growth. So, we have to leave you with this final thought. Is TRON the unbanked, utility-backed financial rail that your portfolio actually needs? Or is the regulatory drama surrounding its founder just a little too heavy to stomach?
Thank you for watching this video. Please subscribe this channel.